Hi there and welcome to the daily recap show for the US session of Wednesday the 4th of May. So we said that we'll start with the S&P, and we said that the S&P continued to push up in a very corrective nature, and we had FOMC yesterday at 7 p.m, so it could continue ahead of that announcement, and we needed to be aware of price action ahead of the FOMC because it could be quite choppy, so caution should be exercised. We said 41.96 to 42.06 was initial resistance, and we should be wary of false breaks at that area. And we should also, if we saw impulsive moves to the downside and sustained breaks below 41.47 to 41.55, we could see a move towards support at 41.10 to 41.25. So let's have a look at the S&P from yesterday. Okay, so you can see that price action was relatively quiet ahead of the FOMC. However, we did say that 41.47 to 41.55 was the area that it needed to break to see the downside momentum, and you can see we got a nice reversal off that area there, which was the push higher. And ahead of FOMC, we also held that 41.96 to 42.06 area as resistance. So if you've got long from here, there was the potential to move to see that target up there. As soon as FOMC hit here at 7 o'clock, you can see the price action just got very volatile, very, very choppy. And then we saw the breakout towards the end of the session. We've seen that rally up to some key resistance up here, sort of around the 4,300 area. So the markets obviously did like what they heard from the FOMC yesterday, from the Fed yesterday. But the zones worked really well ahead of that meeting, despite being a little bit of choppy action. Hopefully today we'll see, now that we've got a bit more volatility from that FOMC, now that we've broken out from that contraction, we can start to see some more opportunities provided for us. So as always, we'll provide the reports with the inflection points and the key areas. But now let's go and have a look at the Dow. So for the Dow, we said the initial resistance was at 33,280 to 33,340. However, we should be aware of false breaks of that zone. Acceptance below 33,095 to 33,130 could see moves to the next support at 32,890 to 32,940. And again, price action could be choppy ahead of the FOMC, so caution should be exercised. So now let's go and have a look at the action on the Dow. Okay, so we said initial resistance was at 33,280, and you can see here at the open, or just after the open, we reacted with a high at 33,280 spot 7. So that resistance held, the initial resistance held well on the open. We then got the push down, and this 33,095 to 33,130 did actually initially hold as support. There is a reversal pattern there. Having held the initial resistance, it's very aggressive and probably not one that I would advise. However, if you'd taken that one, this would have been a losing trade. That said, the price was very corrective here, so plenty of opportunity to realise that the market's not going in your direction. It couldn't push higher, so therefore could potentially push down and manage that trade. So there was some advanced ways you could have managed that, and also this would have been a very aggressive entry. But potentially that is it's a valid signal because we have taken out that liquidity that we always talk about. But yeah, this was potentially a losing trade. We then got the push down below, and notice we got this false break signal of this zone. So we've got the acceptance below that zone, but we got this really strong push up, and then when we come back and we held the bottom of the zone as resistance before getting that really strong push up again into that initial resistance zone. We've got another sort of reversal pattern here, having taken out the liquidity of that previous cash high over here. But this would have been very, very risky just less than an hour ahead of FOMC. So not one that I would advise to take, but it did have that liquidity grab as well from that initial resistance. So again, like the S&P, the initial resistance held really well ahead of the FOMC. The support here had the false break. So may have trapped a few people shorting below there. But as we mentioned in the report, we had to be wary of that FOMC. As soon as the FOMC happened, we got this really, really choppy, volatile action, and then it settled. And like the S&P, it has just taken off. So the markets, obviously, as I say, liked what they saw from the FOMC and from the Fed yesterday. So hopefully that will create some more opportunity for us in the market, and we can take advantage of that. So I'll provide the reports this afternoon ahead of this afternoon session. But I hope you found these reports useful and this recap useful, and I'll speak to you again later. Cheers.